Is it? Yeah, now it's working. Perfect. So sorry about that. Now you should be able to hear me. 7 viewers, let's go. Just want to remind you, today is the last day of the accumulationzone.com Black Friday sale. If you want to check that out and get in on a 50% discount, that's the best discount you get all year round until next year Black Friday, basically. That's how we're handling it. We might do 10 or 20% discounts eventually down the road next year, but nothing planned right now. So let's jump back to trading view. We cleared sell side, and like we spoke about it yesterday we had a similar scenario. We had an Asia session range. Now I hear myself. So sorry about 20% discount. And also note there is around a 1 minute delay here on YouTube. With the internet, and a 30-second edit delay. Just, I don't know, to make it fair to paying members if I'm already streaming or sharing this for free. It won't continue forever, the continued free YouTube live streams, but eventually. So I was talking about yesterday, Asia range, London breakout, and we kept on going higher and higher and higher. But prior to the New York Open, we anticipated a move back into the 50% of our daily range before we continue higher. Exactly the opposite happened. And we continued higher first. We capitalized on that movement to the upside. Then we just ran away. To recap what happened yesterday, we were looking at the 15-minute breaker block. I had my limits order set. But unfortunately on the micro contract that I used to manage my risk a little bit better, I didn't get filled because on the micro we never hit that 15-minute breaker block. If we take a look at it, lowest down closing candle right here on the 15, and we just wicked that one. We don't retrace up higher into that. We have our bearish fair value gap and rejected from that area, taking out equal low sell side, retraced, consolidated a little before we made another leg lower. That's summing up yesterday pretty well. I didn't take another trade during the PM session. If we take a look at the volume point of control from yesterday, 5 minute, 15 minute, you can see it comes in right here where I drew it up. Well, almost. Not sure actually why it changed, but we can see where we saw our resistance heading into the new day. That's how I like to use the volume point of control. High volume node. We hit that area. But let's get rid of these lines. And why have I been talking about yesterday? I think it's interesting because what I was anticipating yesterday might happen today if we do not want to continue lower to, for example, take out the previous day's low and the low of the week coming in here on Tuesday. If we take a look at the indices at a bigger picture, low of the week here on NQ would be on Monday. We didn't take that out yet. High of the week on Wednesday. Weekly template, classic. We look for the week high and low around Wednesday, Tuesday, Wednesday, or Thursday. Only during true expansion weeks to either the up or downside, we get a high of the week on Friday. That would be the thank God it's Friday setup. But looking at the bigger picture, we spoke about the potential left shoulder, head, right shoulder setup on NQ and both ES here. Let's see. Let's zoom back in. So we have sell side below, low of the week, sell side. Let's actually mark that out. We labeled as low of week, LOW. I have two more vertical lines on my chart. Those represent news at 9:45 and 10 a.m. We will have the Chicago PMI and the pending home sales. Medium impact, but still something after 9:30. It's interesting to me. We already got the core PCE price index and the unemployment claims today. Let me actually check if I'm using the correct mic here on Discord. Yeah, it should be based on what you said here. Now it is on. Is it? Yeah. Alright, so we can see this is our current daily range from the London sell side liquidity down here. Bottom right. Let's label this as London sell side. We took a long, or I took a long at the end of the live stream. Right here, executions. So to recap the London session, I'm not trying to chase this here now prior to the New York Open. I'm gonna wait for a nice setup with the New York Open. I'm already 250 bucks in profit today on that Apex funded account. No reason to rush anything. So let's do a little London session recap. So initially, let's actually use the replay feature. This is what I was dealing with. Let's wait for another ICT all-in-one doesn't work really well during replay, I think at least. Yeah, doesn't work. So let's get out of replay. Right here, bounce off the VWAP, looking bullish, leaving behind a bullish share value gap paired with the midnight level. I entered long right on the midnight level and decided to close the trade once I see a candle closing below this bullish share value gap. That's what I did right here. Immediate exit. We pushed back above, volume imbalance, and closed back below the midnight. So just a little bit of, yeah, fucking around the fair value gap. So the first and then the second close around the midnight level. And then I think I was talking to Ryan or looking at Bento book, doing something else on the computer, or maybe comparing ES to NQ, but not focusing on the main job. Because right here we could have used the inversion fair value gap. I've got that down in my journal already. Inversion fair value gap now with 2 confirmed closes below. Tested the midnight level again and ran into Asia sell side. So I missed out on this opportunity, and then I was wondering, okay, can we continue this bearish momentum? Just testing, getting a feeling for the market, risking 2.5 points. I got in right here at the 50%. 50% of this lowest bearish value gap to see if we want to use that and continue lower into the previous day's low. Very similar to what we saw earlier this morning on EU, where we continued lower into the low of the week. We used the lowest bearish value gap. This was what I anticipated here on ES as well, but managing the risk well. 50% came in right here, I think. No, 1 tick above that. Targeting 5 points, or basically the previous day's low. And my stop loss has been placed at 2.5 points. So I got stopped out on the same candle. In hindsight, I placed a limit order here and tried not to, worry about it too much. But this led me to, not focus on the time, because at what time did I get filled? Right at 4 AM with a new hourly open. Well, that's usually when I hit my stops, when I don't pay attention to time. So that happened. Got stopped out right here, but this didn't, pulled me down or anything. I saw the nice continued move to the upside. We had 1, 2, 3, 4 equal highs above. We saw the bullish momentum. I used the fair value gap as an entry with another entry down here right at the VWAP, catching the low. Taking a partial at the equal high buy side following standard protocol. And then I used this short-term high right here, because really between this short-term high and this short-term high, too much room to breathe, and I didn't want to hold the trade up until the next New York session, or the upcoming New York session. Even though it would have played out, I preferred taking my profit. So overall I ended up with 5 points in net profit. We continued to go higher. We already spoke about that in the VIP chat, how we've been respecting these discount PD arrays, or the bullish share value gaps, and inversion fair value gaps that I mapped out here to the left, until we reached PM buy side liquidity. 8:30 news, unemployment claims and core price CE index. Consolidated, took the buy side and immediately rejected. So taking it from here, I'm certainly going to wait for the 9:30 open to show me its hand. We just swept sell side liquidity. That's the first sell side. Short-term low, relative equal lows, those two lows. below the 50%, and also note where the 50% is coming in at of our entire daily range measured from London sell side all the way to our 845 high. Comes in right at the consequent encouragement of this white area, and that's the new week opening gap from the ICT all-in-one indicator. So that's where the 50% is currently sitting at. We swept sell side below. This would have been my target to get in on this. We can check the 1 minute time frame on the 1 minute. Higher low, higher high, market structure shift, and we just continued selling off. So the only possible entry would have been right here on the 1 minute, this bearish share value gap where we retraced, or simply a market order. But if you've been watching me for a couple of times now on YouTube or on Discord, you know I'm not the biggest fan of chasing a trend. Maybe eventually in future. Not saying I'm not gonna use that at all, but for right now, based on my journal and previous trades I took, I do better ignoring market entries, even if it means I'm missing out. I don't want to be involved in every move. I picked the setups that I take very cautiously. Sometimes I take feeler trades where I risk relatively less, 0.25% of my equity to make 0.5%, like right here. And right now, 9:15, no interest, and of course we could simply continue lower here with the New York Open, but I don't think it's worth the risk. If we take a look at NASDAQ and zoom in here on the 15-minute time frame, we're almost at the low of the day, so we're much lower compared to ES. This could present an opportunity or a fake out. We can see right here we're still holding around the new week opening gap on ES. If we look at the 15-minute time frame, we took Asia sell side already. We took out this short-term low, and this short-term low, we didn't touch the midnight level yet. We opened up on the 15 with the second bearish volume imbalance in a row. That's usually a good sign. While on NQ, we're already below the midnight level, comparing that. And we were very close to taking out the Asia sell side. During London, we had SMT divergence at the highs. Right here, we had equal highs on ES, SMT divergence here on NQ. Yeah, let's see. Let's bring it back to ES. Inversion fair value gap. A old bullish fair value gap that has been used to run 1, 2 equal highs to continue higher. Now being used as resistance, just following order flow here. Have a little bearish fair value gap coupled with that. Tested the inversion fair value gap, continuing lower. So the next area of interest for me would be the midnight level. We already cleared the first sell side target. Next sell side target would be coming in at 4564. This would be our breaker block, this entire candle, so we could also mark that out. Breaker block. What I do not want to see is a consolidation right around the 50% prior to the New York Open for continued shorts. Maybe you're already short. That's usually not the best sign. That tricks retail traders into taking the continuation short. And if we see wicks to the downside, like right here, or maybe even down here, another wick rejecting, usually signals buying is taking place. And we are also right now, if we take a look at the volume profile, we've been doing that this week lately. We're right at the volume point of control, right here. 1, 2, 3, 4, 5, 6, 7, 8, and now the 9th touch. We also have a volume imbalance that I used earlier to paired with a inversion fair value gap to take the long on ES. Gave me more confidence. Right here, we filled the fair value gap, moved away from it. And then at this point in time, the critical point was if we can close above the midnight level for me. And we've done that. So we close above midnight, we close above this bearish fair value gap. We use it as support. Doji had a volume imbalance to the upside, but here we didn't retest it, we left it open. So at this point in time, I saw, okay, I'm already nicely in profit, but very likely we're gonna retrace back into this unfilled volume imbalance because we always end up doing that. Exactly what happened. Open up with a bearish volume imbalance at this point in time, but in the trade, in profit, not worrying too much about it. Close it in, new bullish volume imbalance, and we run buy side. Following 2 candles, hit my other 5-point target. That was pretty neat. And from here on, we retrace a little. Bearish fair value gap kept up holding resistance right here. If we take a look at that, following order flow, making sense out of what happened with fair value gaps. Bearish fair value gap continued lower, and here we started to consolidate, put in a W formation, holding support on our 1:30 a.m. inversion fair value gap. So initially, a bearish fair value gap that has been tested once, twice, 3, 4 times, and every time we tested it, bodies respected that area. So that's the only time when I really use a fair value gap, or when you see me use a fair value gap pre 2 a.m. I wanted this to be respected, like a good support and resistance zone basically. We keep on holding support here, hold the volume imbalance, and move away from that. Leave behind one breakaway fair value gap, followed by another one, taking the entry on the highest one. Or you could have also even used this inversion fair value gap now that we closed above it as extra confluence support. Take out buy side and continue higher. Leave behind a new bullish fair value gap. Use it as support to continue higher. Form a new higher high. Leave a volume imbalance behind. Paired with the 50% of this confirmed inversion fair value gap because we closed above. And a new bullish fair value gap right here. I don't have this on my chart anymore because otherwise everything would be covered in boxes. We close below the fair value gap, yes, but note how we open up immediately with a bullish volume imbalance. So that's a gray area. If we close below but immediately get back up, I always hesitate a little and give it another chance. We also see we still respected the volume imbalance and the 50% of the inversion to make another higher high. And then of course news came in, little bits of a whipsaw action. So both up and down side, both sell side and buy side have been targeted. We leave behind equal highs with yesterday's PM session buy side coming in right here at 1 p.m. Eventually we take that out. That's why I didn't like taking a short right up here. I saw the equal highs, and equal highs goes against my rules to take a short. Took out the equal high buy side and moved away from that. Now we're consolidating around the 50% of our daily range after taking sell side in a discount, trapping traders short, picking up some stops off the long. So if we want to continue higher, we understand why that would happen. So inventory is long right now. Traders saw the reversal, likely didn't get in down here, but most of them got in somewhere around here, 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 or very late for the New York session. Traders chasing the news event, hoping it's going to continue higher. Being trapped, pushing it one more time to the upside, making it look like, okay, fake out, we continue higher. This is going to be our breakout. Trapping them up high and quickly, old-fashioned way, take out short-term lows. And also the first short-term low in discount below the 50%, basically below that new week opening gap here. 9:20, so we have 6.5 more minutes until or before the New York Open. Let's see, let's drag this one out, can we? Still a area of interest, but I'm gonna leave it where it is. Bearish fair value gap, inversion fair value gap still holding up. can see that's overlapping. Old resistance, support, resistance again after we cut right through it. But I'm not gonna leave that here. Gonna leave it right here. Inversion fair value gap. Right now we're just playing, wait for the market to show its hand. The DXY hit the 61.8 golden pocket retracement level of this entire move to the upside right here. Filled the bullish fair value gap, but this time didn't close below it. Right here, gap, we closed that in, retested the 50% and started to move to the upside. So we could actually be looking at bearish fair value gaps now from this move to the downside here. So we have this volume imbalance right here on the daily. We have a bearish fair value gap and we're already above that. DXY retracing could lead to indices heading lower. Same goes for EU. We have caught some pretty good trades on EU today, this week. Today it was tough because we didn't take out the Asia high before we got the market structure shift. Also didn't spend too much time on looking at EU, but we've been keeping track of the DXY. Right here, tiny little bearish value gap that we're inside of right now. But the DXY has been respecting our inefficiencies that we draw up perfectly. Easy enough for us to paint or, yeah. Here, value gap, blah, blah, blah. 50% inversion. Pushing up higher, EU therefore continuing lower. Let's take a look at both indices. And Q not very far away from taking out the low of the day down here. So we keep track of that, low and high of the day. While ES is still holding above the midnight level and bouncing around the VWAP. And that's usually when we see those volume imbalances left and right. Volume imbalance down, volume imbalance up, volume imbalance down. They don't have much meaning in a consolidation. The ones that form in a trend, they do. A 15-minute time frame, swept the low. It's 9:25. We have 3 more minutes until the New York Open. Our daily range. Let's turn on the higher time frame candle. Power of 3. To get that visualization of what the daily candle looks like right now. And also be aware that we have, news coming in at 9:45 and 10 a.m. Let's see if we have any questions. Nope, not right now on Discord. Let's check over to YouTube. Good morning, Christopher. Nice to see you again. 21 viewers. Let's go. Guys, if you have any questions, feel free to ask. That's why I'm doing these YouTube live streams. And now here myself. Let's see, 9:25, 1.5 minutes. I'm gonna fill up my water bottle before the New York Open and be back in no time. There we are. Let's see if we get that close below midnight on the S here. Nope, we don't. Volume imbalance to the downside. Take a look at NQ. NQ took out the low already. Potential for a 6 sister setup. Almost at the previous day's low, while ES is not yet. I'm not going to the 1 minute time frame this morning for the New York Open. I'm gonna watch it on the 5. Already in profit for the day. We understand what price has been doing, where it's coming from, what it likely will be doing. That would be London sell side on the previous day's low. Only if it offers us an opportunity, then I'd consider taking an entry. But like ICT says as well, and many of the other people teaching ICT stuff, you don't want to go short in a discount. You want to short in a premium. Then the question is, okay, what's discount and premium? Who's defining that? Well, we are. I do that by looking at the daily range. Red is premium, where we're coming from. Green is discount. Some people, say that's discount premium. Whatever your narrative is. If your narrative is higher prices, well, then that would be discount if you want to see it continue to higher prices. If you think that, no, I think premium is always to the upside. Discount, the area up here now for a short, sell in premium and buy back in discount. And for a long, buy in discount, sell it back in premium. Yeah, that makes sense. So we took out the low, we have SMT divergence. Sell side liquidity taken. We once again hit the new day opening gap. And getting around at the 50%. Yeah, it's like shooting a gun in the dark. You don't know what's gonna happen. It's 50-50. Might have been a bad comparison. But that's what we get. 50% entries are always tricky. From the open, we move 3.5 points to the downside. Oh, look at that. You see that? That screams opportunity to me if I would be trading NQ. Sweep. Swept the previous day's low, swept the low of the day, while ES did not. Now, regular trading hours opening gap. Is it? Yeah. This orange box right here. Without having to switch charts all the time, simply shown on your chart. I looked into NinjaTrader since I recently installed the entire software ready to go on my Mac here to launch the Apex trade copier system that I have been planning on doing for like the last month or so. Maybe gonna work on a version of the ICT all-in-one for NinjaTrader as well. But I still think trading and charting, well, charting is better on TradingView. The trading experience might be better on NinjaTrader, but it's up to you. You can have both tabs open at the same time. They're similar. I can pull that up maybe later if you guys are interested. But this is a stop hunt, like, come on, let's go to the 1 minute time frame. We wick and immediately pull away from it. Take out equal high buy side right here on NQ. While on ES we don't see any of that. Push back up. Let's wait for this candle to close. Just because I don't enter a trade doesn't mean you, of course. Just want to have said that you can't enter a trade. If you like a setup, take it. I do me. It's my funnel account. But I hope I'm explaining the narrative well. Not really with a big daily bias that this has to happen today, I go with the flow. That's more sort of my approach. And for me right now, the flow is bearish. Pretty simple, pretty straightforward. And following that flow, I would target more liquidity to the downside. We have a new inversion fair value gap. A volume imbalance, we have already tapped that. If you want to take these rather aggressive volume imbalance entries to chase it into sell side liquidity, well, a viable option. Likely also going to play out. But going short in a discount can oftentimes lead to, protecting yourself against more drawdown than you would initially anticipate. Volume imbalance, bearish fair value gap. It's like yesterday, where we have it. Right here, our 15-minute breaker block. Yeah, we use it as our entry, paired with our 5 and 15-minute bearish fair value gap. But do we expect, or is it healthy to assume that every time we touch it, we immediately reverse away? No, not really. Like most of the time we retrace a little bit higher, maybe do a internal 2022 model where we shift structure, retrace and continue lower. Otherwise, I mean, we could place our entry right here and our stop maybe 2 ticks above that, if we're always so sure that's not going to retrace any further than that. But sometimes it happens. So we have to prepare for that possibility. Yes, risk managers. And that's why I use the micro chart. And on the micro, we never touched that level, so I couldn't profit on that continuation short of the breaker, 15-minute breaker. But we miss opportunities every week. We can't catch them all. Limit orders were set. We can't do anything more. Well, I guess we could chase, but that's not my specialty. Take a look at NQ. NQ seems to continue lower again. Did it hit the fair value gap up here? Yeah, NQ hit the fair value gap, hit the inefficiency, hit the breaker block. That's the 15-minute breaker block. Higher high, higher low. Well, you could argue higher high, higher low, higher high, higher low. But it's much cleaner if we use this one. We hit that with a fair value gap and we're back to the previous day's low. 1.5 minutes to go. Looking at this fair value gap right here. Did anyone get into the shorts? Now we hit London sell side liquidity. I leave that up to, I don't know, the rest of the year to see how well market entries maybe would work just by going with the flow, understanding what price is doing, because sometimes it doesn't always offer us the opportunity to enter on a discount. Like said, volume imbalance entries. I usually, at least right now, I'm not taking them on my live funded account. On my challenges, I always take them. They're sometimes the best opportunities in an aggressive trend to the downside. We open up with a gap, we retest the previous closing price and continue lower, like we did right here. But for my funded account, using micros, that's too much risk, especially in a discount below the 50%. Not what I like to do. All right, so now we hit the previous day's low. That's all done. There we go. Most of the objectives, or at least the first objectives, are met. We hit sell side liquidity. We spoke in the VIP chat about the head and shoulder setup right here. We hit PM buy side, and that's exactly where we reversed from. We have the low of the week. We have some more sell side right here. We have news coming in in 5 minutes. We have some more relative equal lows down here, just to mark out some more sell side liquidity targets. Bottom right, low of week. Sell side liquidity equal low. We tap the previous day's low and we immediately get a buy. TXY continued to rally higher. EU rejected off the new week opening gap right here, continuing lower. Let's zoom out here, go to a 15-minute time frame. It's head and shoulder setup. London sell side, the low of the week coming in here from Tuesday. And on NQ right here from Monday at 15,939 would be our next target. We closed below London sell side and we retraced a little. 1 minute time frame. Hit a bearish value gap and continued lower. Volume imbalance has been respected perfectly. Unfilled volume imbalance. I'm not trying to chase this short now. I wait for something after 10 AM. Be patient. Take some notes into the journal. And see if we have any questions. Nope. Not at the moment. Discord. Marley Beck. 5-handed vulture. I like that. I like that name. 5 handles. It's my mission. Marley Beck. Volker Kuch. 5-handle. Any questions? Did you engage on that short? Did anyone on YouTube engage on a short? I mean, that's just me and my current rule set that I don't follow price action with market orders. And yeah, also not taking volume imbalance entries at this point in time. I prefer getting them on a fair value gap. Opportunity was here to get in prior to the 9:30 open on a fair value gap. Right here. Safe stop would be right up here, but yeah, with the New York Open and stuff, we never know. I prefer to avoid these setups that we get around the New York Open. At least for my funded account. For a challenge, I'm fine taking them. We expand our daily range right here. Yep. So many boxes. But at least we can use them to make sense out of price action. Buy side of the curve, sell side of the curve. Once again, like yesterday, like we spoke about it, repetitive pattern. That's when I like to use trend lines. Just a rough estimate, 1, 2, 3 touches, we break it, we head down. So in that sense, we take the stairs to the upside, go sideways, go up, go sideways, go up, go sideways, go up, news come in. We're not sure if we want to continue higher or if we want to hunt stops, like we spoke about it yesterday. Where's the money at? The money is below each and every higher low. Boom, we take out our last objective, the PM session buy side liquidity, and reverse. Low resistance liquidity run. That usually happens, so I like to explain it this way. We take the stairs up, but then we're exhausted and we take elevator to the downside. All right, 9:45. That's our first news release. Let me check that here. That would be Forex Factory Chicago PMI. That was a super clean break here at the open. Is that on ES or NQ? Let me take a look. Well, for me to qualify it as a super clean breaker here, at least on ES, I would have liked to see buy side liquidity taken. So right here, 9:30. We continue lower, get our push up. So if this candle would have taken out some buy side and then we close back below it, paired with the volume imbalance, that's a clear stay short for me. But I think we did that on NQ if I'm not completely wrong. 5 minute. Let's go to the 1 minute. Yeah, on NQ we took sell side. We hunted the stops, those relative equal highs. Immediately went back below it. And then we just ran. So a market entry once we break that low would have been a opportunity, a turtle soup entry right here at these relative equal highs. Right here we sweep them, wick them and immediately turn around. Maybe a 30 seconds chart. I'm not a fan of that. You will never see me use that here on the stream. I think a 1 minute time frame is low enough. If you're not able to catch a good entry on the 1 minute, well, why should you go even lower? You just get more entries, but you're still not able to decide which ones are the good ones and which ones are the lower quality ones. My favorite time frame at the moment is the 5 minute time frame, especially for the London session. Always provides clean setups. Also for New York. But they tend to be more precise if you go to the 1 minute time frame, at least your entries. So we hit the equal lows. We fell short of the sell side liquidity right here. This inverse head and shoulder setup from Tuesday, left shoulder, head, right shoulder. And we have another set of equal lows actually, right here. Take a look at the DXY. The DXY is still pushing to the upside. NQ almost at the low of the week. Come on. Almost hit Tuesday's sell side. And then Monday's sell side, or the low of the week for right now at least, would come in right here at that Asia's. Ah, damn it, now I have to zoom in. Right here. Not very far away from Tuesday's low. That's where we saw that SMT divergence between ES and NQ, because ES actually took out Monday's low. No, I'm just gonna do it like that, while ES NQ didn't. And that SMT divergence ended up delivering into monthly buy side. We took that yesterday to the tick. Caught the high of the month and high of the week likely to the tick with our last long position right up here on this last leg higher. So right now you could imagine The monthly candle, a super bullish month. We spoke about that yesterday, and I'm going to include it in the weekly outlook monthly recap. That's the video I'm planning for the weekend for the VIP members. Bullish candle on the monthly came all the way up here, and eventually we're gonna see a wick being created, and that's basically what's happening right here. But if we bring it to a monthly perspective, and put it in relation, like that's what we're looking at right now, that's what we're trading, looking at the higher time frame. Contract adjustment on, we took out the September buy side and rejected after one of the biggest bullish candle here on a monthly time frame this year, 2023. We understand why we rejected from this high like we did. We ticked it, we wicked it with one tick, and boom, moved away from it. All right, let's keep an eye out for these lows and go back to ES, which right now is retracing. Take a look at the 1 minute time frame. So while this could be a market structure shift to the upside, that is going to play out. Let me rephrase it, that could play out. What I don't like is all the sell side below, especially on NQ. Like, come on. Eventually today we're gonna take out the low of the week. Yes, we could get a short to maybe medium term retracement. Could label this New York Open move as the Judas swing to move back up, but not really without taking the sell side. But we understand what could be going on here on the 1 minute time frame. Market structure shift to the upside if you like that, and if that lines up with your daily bias or whatever bias you use, that would be a trade you could take. But on the higher time frame, we see that we're poking into a 5 minute bearish fair value gap, a inversion fair value gap, we have that volume imbalance and the new day opening gap above. Like said, today I'm only going to be executing on the 5 minute. I'm going to take a look at the 1 minute. Retested the high of our breaker block right here. You can see that to the tick. Wicked. Opened up, retest, and continuation up higher. Took short-term highs right here and right here. That next short-term high would be coming in at 4563.5. So for everyone that's watching on YouTube, yes, there's a little delay. So yeah, copying my 1 minute executions will be pretty hard unless, yeah, it takes a while for me to get filled. On 15 minute, interesting. NQ, 1 minute, beautiful MMXM. Yep. The final target would be down here. That's why I'm hesitating to take any longs in a market maker sell model. I think we saw that happening yesterday. Filled the 15 minute bearish. On the ES, we actually hit the breaker block here and also filled the 15 minute bearish coming from the high of the week, high of the month, high of the day. Good confluence if your methodology is selling high and buying back low. Whoa. Strong push here. Let's wait for this 5 minute candle to close. Keep in mind that we have some more news coming in at 10 a.m. Pending home sales. Okay, yeah. Change the number of homes under contract to be sold, but still awaiting the closing transaction, excluding new construction. Well, they're gonna use whatever they want in order to push price around, if they really wanna. So let's see if this happens to be a retracement or if we could eventually expect a reversal from here. We retested the breaker, so far delivered very efficiently after we shifted structure, taking out our first set of first set of relative equal lows right here from Tuesday with more sell side below. Tap the VWAP, filled this unfilled inefficiency. We hit the breaker block again. Well, can't really call it breaker. Here on ES at least. So let's see, the 5-minute candle closed. We blah blah blah. So first of all, we hit this inversion fair value gap. That's overlapping with a nice bearish fair value gap right up here. Our 9:30 a.m. bearish fair value gap. We hit the VWAP. We still have the midnight level above us. We are back above the new day opening gap and this inversion fair value gap. But I'm gonna get rid of that because otherwise I just have too much on my chart. So right now, just going with the flow. Could see potential support around this area. I'm gonna wait for the news, dropping in 4 minutes. Our daily range has been expanded a little bit. You can see that that 50% level is we're almost back at the 50% of our range after expanding it to the downside. Perfectly lining up with the midnight level here on ES. On NQ, I still don't like that we didn't take out these lows. If we would have taken out these lows, I would have more confidence that we might actually not immediately continue lower and might get some sort of a stop hunt for all the shorts and especially late shorts that FOMO'd into the market. Let's take a look at the volume profile to understand that. 9:30 over to the low. You can see the volume point of control coming in right at the low. That's where most of the volume has been transacted. Now we're back to the volume weighted average price. A great baseline to use. I mean, you can't deny. It's just an additional confluence. That many traders have on their charts, like SMB Capital. They run their main operation based on VWAPs, left and right anchored VWAPs. Just because we like ICT concepts doesn't mean that we can't stay open-minded. Some can't, and sometimes I get the shits for having a VWAP on my chart or including it into the ICT all-in-one indicator, but well, if you put yourself out there, there will always be someone criticizing someone else. 1.5 minutes before we get a new hourly candle. This could be a potential Judas swing to the downside, hitting the previous day's low, and we reject from that. One-minute time frame. Obviously, targeted buy side would be this high right here, this high right here, and this high. It's basically of this little consolidation area. Go to the 5-minute time frame. We don't need these old fair value gaps anymore. We've already discussed everything that happened from the London session, how we've been respecting discounts and premiums. So I'm not gonna have them on my chart anymore. Except for the most recent ones. Trying to keep it as clean as I can. All right, 15 more seconds before we get the news. Candle, now we have equal highs. inside that 1 minute bearish. Starting to look like that V formation here on the 1 minute at least. Okay, so news candle comes in. We have a new bullish fair value gap overlapping with new information here on the 5 minute time frame. We could label this as, or that's at least what I like to do, as a high probability order block. No wick to the upside. Took out sell side. Immediate move away from that, leaving behind a bullish fair value gap. Paired with a inversion. Let's actually take a closer look at that. No, I don't want to risk it anymore today. 5 points. At least for the long. Not going to counter trend. Based on what I said earlier. NQ is about to take out these equal lows. Or that sell side. News candle comes in. Rejects. Bearish volume imbalance. We don't have a inversion fair value gap right here. We hit the bullish fair value gap down here of our 2022 setup, which already delivered to a good objective, the VWAP. We'll see if that holds up, or if we just use that as a trap to get a few longs on the market before we continue lower. Good decision that I didn't decide to go long on this one. Okay, we closed on the volume imbalance and open up with another one, continuing lower. So this would be our last level of defense, this bullish fair value gap. Could use that as inversion on the 1 minute to take shots from. NQ likely hit the objectives. Yep, at the low of the week now. This is our previous week's low. Could be another potential sell side target with our previous week, new week opening gap. Get rid of that market structure shift. Little fake out. And keep in mind, it's the end of the month. Tomorrow is going to be the 1st of December. Unfortunately. Unless you're super excited about Christmas again. So, little question here for everyone watching. What are your biggest lessons that you have learned if you've been trading for the entire year of 2023? Yeah, what are your biggest lessons or key takeaways going into the last month of the year, going into 2024? What do you want to improve? What are your biggest setbacks or the stuff that's holding you back, basically? Of course, you don't have to share that with me if you feel that's too personal, but well, I mean, we all have the same dream essentially. We have, or at least the same goal, similar goals. We might do different things with that goal that we all have in common is to make money. And if you really enjoy doing that, become a full-time trader. So why not share our experience? So if you feel comfortable enough talking about that topic, what's your biggest lesson that you have learned in 2023? Trading ICT concepts or whatever you have been trading. Could be anything. 5-minute candle closed. Use candle, push lower. Yep, I like that. Let's see if I get filled, if we even want to retrace back into that area. Looks like it. Okay, so we're tapped in on the inversion fair value gap. Let's hope we not get an immediate bounce off that area, since NQ took out the sell side now. And actually see, yes, continue down a little bit further. Only time will tell. Past 10 AM, let's check out the 1-minute time frame. Stop right here above the high of this candle at the VWAP inversion fair value gap to actually I would expect resistance from that area now, because it didn't end up holding support, to continue lower into the first raw liquidity being the low of the day. Or we just could be potentially be forming a W formation, maybe, in case we're wrong. But I like the setup. During the SilverBullet hour. Not really a SilverBullet setup. Well, I mean, I think we could label it as a SilverBullet setup if we want to. We have a good draw on liquidity. The low of the week, equal low sell side, low of the day, blah, blah, blah. We are in a bearish trend. Market maker sell model. 1-minute time frame. Yeah, let's watch it on the 1 minute. Head over to YouTube. Staying patient, don't mess around with the model. A+ setups only, that's the way. Separating opinion on bias from actual bias. Your own opinion on bias from the actual, well, okay, interesting. Staying patient, don't mess around with the model, A+ setups only. That's the way. A good takeaway, that's for sure. NQ closed below all these levels. Let's watch it on a 1-minute time frame. Both of them. So what we want, what I wouldn't like to see now on a 1-minute time frame is this bullish value gap here to support price. I would like to see this candle to continue lower immediately. And ideally close below it, hunting sell side. Because if we find support here, yeah, I think the W formation could be playing out. I'm doing this trade, I'm holding it on a short leash. We've already filled in the inefficiency. We respected our area. We have another inefficiency above, but I'm not really willing to hold it into that drawdown. Don't want to give it the opportunity to form the W formation. I want to see the continuation into sell side pretty much straight away. 5-minute time frame. Let's wait for that close to come in. It's our 1-minute fair value gap. Seems like we're holding support on that. What I wouldn't like to see. $10 seconds to go. That's going to decide to close off the 5-minute and 10-minute candle close. The next candle is going to deliver a new 15-minute candle, so be aware of that. We close back inside of the fair value gap. Let's see if we can push lower. First potential sell side would be down here. Next sell side would be down here. Give us the close below. Five points from my entry. Where would that be coming in at? Just at the sell side. Okay, so we close below. That's a nice confluence. I close back above. Wouldn't be interested in that. 5-minute time frame. Have a bearish. I don't want to hold it for a potential retracement back into this inefficiency. I want to see it continue lower after rejecting of that inversion fair value gap. So I'm going to place my stop at break even. No interest in, from me in seeing it bounce again from this area to take out this short-term high. I'm just going to take some profit home. I don't like that bounce. Yeah, not what I want to see. NQ is also respecting the bullish fair value gap right here. After taking out a major, draw on liquidity, low of the week, right here. Okay, that's a 1-minute time frame. That would take a while. So now I would have been stopped out at break even. Now we're inside this 5-minute bearish. Like I said, I didn't want to get caught in a potential W formation, trying to get short at the low of the day. Took out some profit. Right now the account is up, $300. Let's watch the consequent encouragement of this fair value gap right here. We have SMT divergence. Do we? Yeah. At the low of the week right here, because NQ took that out. Good thinking from my side. Well, first good thinking I'd say would have been the break even and then taking home some profit. I already saw that coming. Gut feeling. Of course, could also end up being wrong and we would have hit our take profit target then anyway. Could also just end up chopping around here, doing the biggest amount of damage that we possibly can do after running the market up, taking out buy side, picking up stops on the move to the downside. NQ already hit major targets. Could just see some chop for the remainder of the 10 to 11 early AM session. I think I'm pretty happy with taking home 300 on the funded account, $800 away, or roughly $750 away from reaching the payout threshold on this Apex account. At the moment, I'm just trading that account here for the streams. I decided not to stick to the fixed 100% rule-based setup at the moment. There's not much interest in that from feedback with the community. And in the meantime, I'm passing a couple of Apex accounts to set them up with NinjaTrader. I spoke about that in my last video regarding prop firms, because yeah, with the ability to have up to 20 accounts with Apex, yeah, I explained it before, and I explained it in that most recent prop firm review video, if we bring that up. View your channel. Best future funding firm, right here. And towards the end of the video, I'm talking about the Apex cheat code. I really think it's a cheat code. Makes it much easier. Using the trade copier like that, because let's say you have, god damn it, the opportunity to have 20. How I bought a multi-million-dollar egg carton business. Interesting what YouTube is suggesting me here. 10 Apex accounts, adding up all that drawdown, you end up having 25k of margin. And let's say you just trade with one Apex account, you have $2,500 margin. And to make, let's say, a living of one Apex account, let's say $500 would be the target or your average risk, you would be able to risk 5, or your max losing trades in a row would be 5 trades, 1% risk per trade. Let's say you go for a 1-to-1 to make $500. With 10 accounts, you would have to only risk 0.2% on all of the accounts. So 1.2% per trade, per account, to make the same amount of money across all accounts. So you basically leverage the ability that you have with Apex by having 10 accounts, or even 20 accounts. And if we add that up, we have a max losing streak of 25. And that just really gives us room to breathe. Not that we necessarily need room to breathe for 25 losing trades. You can set your risk according to that and just do the math behind it. But, well, it's better than, let's say, you already had a losing streak of 3 trades, which is very easy to happen if you've been in this game long enough. Like 3 losing trades, and then you know, okay, shit, my max losing streak is 5. One of the next 2 trades has to be a winning trade, and when something has to be, well, usually doesn't work out so well. So that's why I've picked that Apex trade copier system that I'm currently setting up with a couple of funded accounts that I have already. Will help me a lot. Alright, there we go. Good call that I closed the position and even took home some profit. We're back above the 9:30 opening, back above the regular trading hours opening gap, back above the midnight on the 1 minute. That's exactly what I didn't want to see happening, that W formation. And we have W's and W's. Like I say so often here on the stream, I'm not 100% ICT concepts. I'd say I'm 70%, a healthy ratio. 70% ICT concepts using fair value gaps, liquidity, that entire concept, market structure shift, SilverBullet 2022 model as my main frame. Then I have a few things that I learned throughout my entire trading journey, like classical charting patterns, common sense support and resistance, double bottoms, double tops, head and shoulder, inverse and not, because they make sense to me. I used to trade them, and if I see them and I can combine it with my understanding of order flow, not by looking at a order flow chart or by looking at a footprint chart whatsoever, just by looking at time-based candlesticks. One of my biggest flaws right now, it's that being aware that I'm basically, that time is one of the most important variables. Now, constants that I have, if I'm looking at a time-based chart, is disregarding time. Like, for example, me during London, taking a short right at the 4 a.m. open. Let the 4 a.m. open, the new hourly candle play out, okay, and then you can still get your entry. If you miss out, so be it. You're gonna miss out on more than enough trades in your journey. But it's too much risk with new hourly openings for my liking. I get filled and stopped on the same candle, and no matter where I would have placed my stop, I would have been negated. And once I saw that candle, immediately disregard that lowest bearish fair value gap. Well, I would already be sitting here, or I was sitting here, literally watching for potential support on this inversion fair value gap. Never happened. We never retraced back into it, but we get the idea. And then I took the long right here, catching the literal low into buy side, not looking for an entire swing. That improves over time. 5 points, like, or 5 handles, like 5-handle vulture. Really like that name. But yeah, living full time, paying your bills based on one funded account, looking for 5 points, I'd say it's rather tough. But having 10 accounts looking for 5 points, leveraging your risk, so you have a little bit of more room to breathe with these future prop firm accounts, that's more realistic to live off. But it's certainly not the easiest thing to do. You have to basically perform at your best every day. Like sometimes if you go into work, like just can't be fucked, and you're like, oh man, okay, I just gotta have to get through this day, get home, and then everything's good again. We all had these, or still have these days. But if you decide to take up trading as a profession and want to be a full-time trader, not just as a hobby to make some extra income, well, it's a little bit harder if you depend on it. And yeah, your performance, you get paid on your performance and not on your, like, you could watch a chart all day and sit in here, clock in at 7 a.m. in the morning and clock out at 5 p.m. in the afternoon, do your 8 hours. If you don't execute and perform well, you're not gonna make money. If you go into work and check in and you do the bare minimum, you still get paid. It's a constant, while being a full-time trader, it's a variable. And income as a full-time trader just isn't linear, or even profit as a full-time trader. It's not linear. It's not a curve that's going up and up and up and up. It's a curve that takes dips. Sometimes, in the worst case, blows the account. We get back up, start again. We continue to go higher. Let's take a look at DXY. The DXY is rejecting now. 15-minute time frame. Let's see if we have something on the 5 here on EU. No, not yet. But we could see the potential for a little reversal back up. All we've been doing today is go lower. On ES. Yeah, not really interested in taking up another trade right now at this point in time. Wait until 10:30 for that second 15-minute candle to close, and then see what we have on the 15. So right now, if we hide all these drawings and the executions, Asia range, swept Asia low, continue to the upside, take buy side, reverse, take out the previous day's low. But we only wicked the low. We never closed below it. So we have 1, 2, 3 rejection wicks to the downside. Well, for me personally, end of the month, I could see price eventually get of course, into that sell side liquidity and the low of the week. The question is, how are we gonna deliver in there? And that could simply be chop. We take out the low again and go back up to some seek and destroy. Too many fair value gaps around this area. We could almost label it a balanced price range. Yeah, I think we could. Bullish fair value gap. I want to watch this one though, because we've been putting in a bullish fair value gap right here. Cut right through it, not respecting it, leaving behind a bearish fair value gap. Cut right through it, not respecting it, leaving behind a bullish fair value gap. That's the signature of seek and destroy type environment. That's ideally what you would want to avoid. The only thing that really works in that environment is shorting the highs and buying the lows. Or often referred to as turtle soup entries. But if you have a strong bullish bias, and you like the setup of a bullish fair value gap here, even though the previous 1, 2 fair value gaps haven't been respected, bounce off here, take out some more buy side, continue back up. So we now filled in this fair value gap, or the inversion fair value gaps to the left. Did anyone end up taking some trades? Anyone watching the live stream? FOMO to trust the setups. Okay. Got stopped out earlier. I don't think I'll be trading this week anymore. Nope, was actually focusing on Russell, but did another double. Was not sure. Events doing their thing. There's no more news today. Nope, there's no more news today. I think the only thing that we have coming up this week would be Power on Friday. Yeah, Power speaking on Friday at 5 p.m. So that's 5 p.m. my time, because I deleted my cage and cookies on Chrome. Then it's always resetting that, and I have to set it back to New York time. Yeah, there we go. At 5 p.m. 4 p.m. It can't be right. Yeah, once again, I changed fucking time zone on me. Eastern time, save settings, thank you. Calendar. News. Fit. Yeah, Fed Chair Powell speaking at 8 p.m. At 4 p.m. This time in New York local time. So at 4 p.m. Man, why is it always changing it back to my time zone? I don't like that. Used to work. -5. Don't want to bore you here. Just want to get this. Yeah, there we go. 10:29 a.m. So at 10 a.m. So with the new 4-hour candle on the futures market, we have the ISM manufacturing PMI. Then at 11 a.m. by the end of the SilverBullet hour, we have Power speaking, and then once again during the PM session. So I'm going to avoid the PM session. I had a very good trading week. Up $1,000 on a funded account. This is my entire month, my monthly dashboard. I think I might even avoid taking trades on a funded account tomorrow unless I see a A+ opportunity from it down. Yeah, I never really looked into the repair setup. I've been fine with the stuff I know. So we close back below it. Not what we would want to see. We could use this now because yeah, we likely have the seek and destroy profile confirmed. So what would make sense? Going short, targeting sell side here now. 1 minute time frame, having 2 bullish fair value gaps right here. Take a look at our NQ and ES. We're already on the 1 minute time frame. We took out the low of the week. Saw some bullish momentum, leaving behind a bullish inefficiency. Form our first lower high right here. Lower high. Failed to make a lower low. And continue push back up. Quick hunt for stops. Form late shorts. Take out buy side. And reject again. Inversion fair value gap. Nope, no entry on that lowest 1 minute inversion fair value gap. Let's check out the 5 here. Similar scenario here on NQ, but right now we're still at least respecting 5 minute structure. Like I said, we had the market structure shift on our chart right here. Rejection of the VWAP with 3 equal highs, the regular trading hours opening gap, this orange box right here. We got the news candle in at 10 AM. Well, some news at least. Moved away from that. Continued lower and lower. Then I used the 5 minute inversion fair value gap to get short in here. But we didn't even take out sell side. Exiting the trade with small profits. Continuing back up above these equal highs. Rejecting of the midnight level. Yeah. Messy price action. I'm not gonna get involved for this AM session anymore, that's for sure. So closing below it, closing back above it. If we close back above it, that's my sign to log out of trade evade. EU. No, nothing interesting today. That's okay, part of it. FOMO and to trust the setups. Okay, that's from your biggest takeaway. Trusting the setup, that's a hard one. But eventually with enough time and enough experience, and what I would say that's my biggest takeaway for this year, journaling. Whatever you use, like right now I'm just using a simple pen and paper where I follow price action, taking notes, and journaling the executions I take, my risk management, how I enter and exit a trade if I make mistakes and what those mistakes are. I can read a little bit of my London journal this morning. Right here, first entry long, bullish bounce of VWAP, equal highs above, entry based on 5 minute bullish fair value gap plus midnight open. We closed back below that bullish fair value gap, so I closed the trade with a, now that's my exit. So my exit was planned to be 2 points, target 5 points. I took a manual exit though, because we closed back below the midnight and the 5 minute bearish fair value gap. Closed back above the New York midnight open, high of bullish fair value gap. Just trying to put my thoughts and my analysis that I do and store it somewhere. Could be a journaling software, could be as simple as a college block and a pen to write all that down. And that really has been the biggest takeaway for me this year, 2023. I could have started that during my first year of trading, but well, I didn't. But this way I can really narrow down my problems or my biggest mistakes. Because every weekend I use a second college block. I've got a double college block set up to yeah, go over all of that. And then I have, okay, calendar week 1, blah, blah, blah. Now we're in calendar week 49, I think, or 48. And then I take a look at that and look for, okay, I have a list for common losing trades. Like what similarities do my losing trades share? And what about the winning trades? What about the trades I don't take? Why didn't I take them? Can I find some similarities? Do I get distracted doing something else? Am I too distracted from the live stream? That has never been the case. And stuff like that. And for example, one common mistake I keep on making that I've discovered through the journaling and really like trying my best to keep track of my thoughts and my analysis is the entry short right here, short ESZ 1 mini, entry at 4 a.m. at 4561. And once I wrote that down, I realized, god damn it, that's mistake number 1. But then I'm already in the trade and I just let it play out. Reasons: took Asia sell side, leaving behind 2 5-minute bearish fair value gaps. Entry at CE of the lowest fair value gap, target 5 points to the previous day's low. The new day opening gap as potential resistance, stopped minus 1.5 points. New hourly candle took sell side momentum, really could have been avoided with that new hourly candle. So that's going to be added to the list of common mistakes. That's the only way how you can improve. Like, let me ask you a question. What were your biggest mistakes 2 weeks ago? Like, or let's say 1 month ago. How can you say you improve? Of course, you can say you improve by looking at your PL, but your PL only shows you a certain piece of the bigger picture. So if I take a look at my PL history, I would assume that all these red days were particularly bad days. Well, now if I combine that with my journal and go through a journal and I see, okay, here on this day I took what I assumed to be an A+ entry that didn't play out, finding a reason why it didn't play out. Was it my A game, B game, C game? Did I make many rookie mistakes? Did I perform at my personal best? Did I overachieve? And all that stuff. So yeah, then your PL blended in with all your thoughts and your analysis and your your entire journal really comes in handy. If you just track your performance based on your PL, I think you could be that could be improved. If you look for something to improve, at least that's my biggest takeaway. Journal, journal, journal. More than just your P&L and that stuff. So I would say I would specify that to journaling your thinking process. What makes you take a trade? What makes you FOMO into a trade? What makes you close the trade too early? What makes you, all these what questions. Why do I chase here? Why did I use a market order here? And there we go, we are selling off. 10:35, new 15-minute candle. Rejected, 5-minute time frame, no confirmation whatsoever. We close below bullish fair value cap, close above it, and close back below it. Didn't sweep a high, yeah. Not interested in that. Let's take a look at NQ. NQ formed a lower low already. Maybe we see something nice on NQ. Not on the 5. No, now we're gonna run for this sell side. Engineering some more liquidity, I would call that. Head and shoulders. Left shoulder, head, right shoulder. We're looking for fair value gaps even on a 1 minute time frame inside of this consolidation or seek and destroy environment. Doesn't make sense. I've learned that from really looking at my journal and making those mistakes. It only works at the end of the seek and destroy range, but it's hard to tell when it's over. We could assume it's over now, enter on a bearish fair value gap and continue lower. But yeah, from the journaling, seeing that most of the times I guess the end of the consolidation or the seek and destroy period wrong. Because all it is I guess, the only good thing that you could use would be time. But we take sell side and we immediately bounce back. And Q took out the low of the day, more SMT divergence between the SN and Q. Let's take a look at the Discord. No new questions here. And take a look at Google and the live stream. I struggle how to journal. Struggle how to journal. Let's say my advice in that case would be to grab the nearest college block piece of paper that you have, ideally something like with a ring book or something. Grab your pen and just start journaling what you do on a daily basis as a little logbook of your executions, but handwritten. I think that handwritten part also adds to it a little bit. I'm working with the developer, one of our community members of Bento Book, to implement sticky notes and all that stuff into the calendar and into an additional section. So you have more than, let's say here for each and every trade, you have these notes. You can add notes if you don't import them automatically from your TraderWeight or Rhythmic account. What I'm doing right now. So if you journal them properly, let's say for example right here, you can add screenshots of all these trades. Where are they? No, that's imported. Down here. Screenshots of the trades I took. And then you can also add notes and stuff like that. That platform is a work in progress, but I like that I'm able to have a right or an opinion to say what's needed, what we need to upgrade. We're going to work on a trade review section, a daily, weekly note section, a better calendar, basically to put everything into one, even though I like writing stuff down on paper and be as thorough as I possibly can. I don't know, if you struggle journaling, just start it like everything else you struggle with. Get better by starting and get better page by page, day after day. Take it one day at a time, and eventually once the first week has passed and you read through your journal, you really see how much valuable information is in that, and then you automatically continue to make these handwritten notes. So right now, usually per day I average 2 pages for both sessions, sometimes 3 pages. If I take many trades, even 4 pages, if we really have a nice thorough day. But I don't mind writing that down, and I think it really benefits me. And if you think it might, just might, if there's a slight chance you could benefit from that, I think it's worth the risk writing a few handwritten notes from a risk manager's perspective. Not putting yourself at too much risk, other than maybe risking a, I don't know, cramp or something in your hand after too much writing. Because otherwise, if someone would ask you blah blah blah, what you said, what are you struggling with and all that stuff, you only answer that question based on your most recent memory, but you don't really remember what happened during August, July. What were your biggest holdbacks back then? How were you able to improve upon these mistakes you made over and over again? Our step number 1 is recognizing the mistake. Not just mentally, like, oh, I keep doing this over and over again. Well, okay, of course, yeah, you recognize the mistake, but do you really act on it? I like the writing it down part because, yeah, writing something down, like if we study for an exam or whatever, most of the people in the modern world still learn better by writing things down on paper instead of typing it in with the keyboard. Maybe not the new generation that's, yeah, sitting in school with an iPad, like those iPad classes or whatever. Most of us still took notes, even in school, with a pen and a piece of paper. That conditioned us to how we learn the best, and I like using that for my trading as well, writing stuff down on a piece of paper. We actually keep on respecting that lowest bearish share value gap here. And now we're hitting sell side, forming maybe a new low of the day. Now we have equal lows. We didn't fill the bearish share value gap right here, so it was the end of the potential seek and destroy setup. So now we should see price move rather aggressively into sell side. Low of the day would still be the target. We tried an entry short right here. That was too early. Could have placed another entry short maybe here, but now I'm content for the day. 1 minute time frame. It's not an A+ setup, I'd say. Too much risk to the upside. I perform at my best in a trending environment. That's when I can really read the market and go with the flow, like here during London. But if we're in this job, that's where it gets tricky. That's where you oftentimes switch your bias from, or not your overall bias, but, well, bullish market structure shift. Interesting, long, and you have all these little things that impact your bias, and you end up taking a long. Oh, okay, now you take a short, doesn't play out, you take a long again, you take a short again. That's not what I'm trying to do, at least not anymore. And the journal really helped me recognizing that. Because after a while, if you journal, okay, I went long, second trade I went short, next trade I went long again, then I went short again, then I went long again. Within a couple of, let's say, a time span of 30 minutes, well, you start to recognize that once you recap the week on the weekend, going through your journal. But enough journaling talk. What's the time? It's 10:48, so we're almost in the 10:50 to 11:10 macro. Last 10 minutes of the hourly candle. Wouldn't be surprised if we take out the low of the week during that time period. Also, wouldn't be surprised if we pull back inside of our range before taking out that sell side, engineering even more liquidity. I'm happy with my daily profit. Tomorrow likely won't be a trading day for me with Powell speaking. We already saw the high of the month, high of the week. Today is the last trading day for the month as well. I have to keep that in mind. We saw the high of the month yesterday. We traded into the high of the month in a bigger picture and caught the exit at the perfect high. Like, I got filled to the tick yesterday. Where was it? All the way over here. To the tick right here, because we had that monthly buy side right at 4596.75, and my take profit target was just 1 tick above it for me to catch 5 points of the entry right I think right here, if I go to the 5-minute time frame, I took it on the 5. Yeah, of this bullish fair value gap right here. Just looking for 5 points. Drawn liquidity being that monthly buy side. We hit that. Got filled to the tick. Never reached that level again. And said goodbye. Then unfortunately not filled on the 15-minute breaker block setup because MES, using the micro for that one because there's more risk to the upside. Didn't get filled because the micro never retraced to this low right here. Alright, let's see if we have any more questions. Otherwise, I would be calling it a session. I hope you learned something from today's stream. Took something away. Hopefully journaling. New ICT video post, so let's check that out. NQ Futures Housing Sales Sell Side Delivery. Okay, the execution came at the end. See that? Hiding if he's connected to a broker or not. Or cutting that piece of the screen away. Well, not saying anything against, don't get me wrong. Just saying to be open-minded. There's a reason why I'm showing the entire screen. You can see like here, that's my TraderVate account. You see those executions, you see my balance. I don't care if you see the account number. I'm just knowing, yeah, from sitting on the other side, how easy it is to make yourself look more profitable than you are. Like, oh yeah, I entered long right here on my funded account. That's on my second screen, yeah. Yeah, and I exited right here at 4564.75. If you claim to be profitable and you can do this, or at least good enough to teach others what you've learned, to follow along on your journey, there's no reason whatsoever to hide that. Because if someone is hiding something, well, we can't put blind trust in that person, but yeah, something I learned is never to trust any random person on the internet. Only if they, yeah, prove themselves to be trustworthy. And if they break that once, I already dumped that, and usually that's just me. Never trust that person again. You can still learn from that person and apply whatever he's teaching, but that's just my thinking. Could be a real account though. But then, question, why hide it? Yeah, Turtle Soup entry. I think he entered market here. That's interesting to see that ICT is doing more market executions. I'm barely doing any market executions. I always want to get in with limits, at least right now. Okay, so he's going in with the market. Yeah, that's how we know it's a paper trade with a TraderVate account to trade on TradingView, or even with a AMP account to trade futures. You do not have the take profit and stop loss brackets. you only get them. So if I go to, let's say, this Apex account here, it's already passed, so I'm switching over to the micro now. I have to get in a micro execution today anyway to pass the threshold. So let's say I'm gonna go long 1 micro right here. You can see I don't have that take profit stop loss thing. I can only reverse position. But if I switch over to a paper trading account and connect myself here, and let's say I enter a long on NQ, buy sell buttons, and go long now here on NQ, we see that now I can draw my brackets from my entry. That's usually how you can tell that it's just paper trading. Not saying anything against paper trading, it's good, but I'd be expecting more from the person I'm learning from. That's just me. We are all allowed to have our own opinion. All right, and all right, that's going to be the end for the YouTube live stream, unless we have any more questions here. Questions or something you want to say, some feedback. I really appreciate feedback. That's the only way how I know what you guys want to see, what you guys want me to talk about, and how I can improve the quality of the stream. All right, sold 5 based on a market entry, took the highs. The draw on liquidity being down here. We are aware of that. That's the previous week's low, or not low of the week. We outlined that as well on NQ. And we add here, that's that exact trade setup. That's the reason why we didn't go long on this 1 minute bullish market structure shift, because we said this is engineered liquidity. We have the previous week's low and more sell side below. Of course, we could retrace a little bit here on NQ and both ES, but I'm not expecting an entire reversal before we take out this liquidity. And then we made a lower low. We only swept those highs, those relative equal highs. Then he entered short right here. Then I think he also added to the position. Yeah, added another 5 contracts to the position. Interesting, the way he's using market orders. But I personally take that with a grain of salt, because, well, I could be sitting in front of my charts waiting for a good paper trade opportunity and take that paper trade opportunity knowing there's nothing at stake. Like, even yourself, like if you just studied a few weeks or months of ICT concepts, eventually you're gonna catch a nice paper trade move because you don't face all these emotions. And then record that, upload it to YouTube, Twitter, and do that over and over again, and you start to build some reputation. Like, oh yeah, I'm studying marketing. I don't know. I know how easy it is to fool the masses. Not that I'm saying he's fooling. Like, I mean, it would be controversial because I'm applying the concepts and they work for me the way I apply them on a funded account, not being scared to share the results or sharing the executions. Only a few live streamers are doing that, sharing their executions. It puts you in the spotlight. It's much easier to say that, yeah, I took a short right at the New York Open off the breaker block in hindsight. Of course, not 20 minutes afterwards, but give it 1 or 2 minutes and you can do so much within 1 or 2 minutes. and say, yep, entered shorts right here. And I know because I've been on so many different Discords, just to test them out and see what their service is like to maybe improve mine. And also back in the day to study and learn from. That's what led me to, be fully transparent, share my executions, follow along on this funded account on this Apex 50K, taking it from, so this is day 19 now. It's not the ICT to get funded challenge anymore, it's the ICT to get paid out challenge. We're on day 19, and we've been taking this one up from the initial account balance. So in 19 trading days, we can also take a look at Bento Book. We're up, once I import the history for today, $2,000, $600 away from the payout threshold. And it's time to cash out. And like we said, we still have our draw on liquidity here. We just wick sell side and immediately reverse back into the range. The only thing that works once you see Seek and Destroy being confirmed is not anticipating that now it's over and now we're going to continue lower into our draw on liquidity, low of the week, blah, blah, blah. The only thing that works is buying lows and selling highs. Turtle soup. All right, Google Chrome. Let's open up the live stream. All right. Since there are no more new chat messages, I'm gonna end the stream here. It's 5 p.m. my time, so 11 a.m. New York local time. We just got the new hourly candle right here. Be looking for buy side once again. Once we hit that buy side, of course, the probability is there. I'm not saying it's zero that we can't continue higher. Just making you aware that probability of it continuing doing the seek and destroy action until it eventually takes out the low of the week is there, and it's higher in my opinion, or not just the bare fact that the probability exists that we right now could be in seek and destroy conditions. Depending on where you took your long from, let's say you bought down here, you got in, you took that turtle soup. Taking partials, I think, wouldn't hurt. 10 points, 13 points just to this buy side. Best case scenario, of course, would be a new high of the day. But yeah, I'd like to make sure to get paid, especially on the Apex Trader funding accounts because of that live trailing drawdown. So yeah, all right. It's going to be the end for the YouTube live stream. I'm going to hang around in Discord for a little bit longer. I just want to remind everyone that today is the last day of the month, and the last day of the Black Friday sale for the accumulation zone. So if you're interested in getting a 50% discount on the VIP membership or the ICT all-in-one indicator or the live stream access, the link for that is right here in the YouTube video description. And if not, feel free to enjoy the free YouTube live streams as long as I do them on a daily basis. Alright guys, take care and thanks very much for joining in and being active in the chat. I appreciate it. During the New York session, we only took one trade right here, trying to go short, but really the only chance we had was here, at least on ES, that's the only thing that I'm focusing on, was the sell-off at the 9:30 open. Unfortunately, not with a proper breaker block because we didn't take buy side or a short-term high first. Continued lower, took out London sell side, previous day's low, equal low sell side. And then after that I guess I got lucky taking out $100 on this short right here because it's in Seek and Destroy. And I don't trade Seek and Destroy, period. So a good setup came either during London for a nice and simple continuation trade. We sweep sell side, displays, and could have basically used any of the bullish fair value gaps that were left behind or volume imbalances to take this thing higher until we hit a decent buy side liquidity target. Okay, then we reevaluate and see, okay, what's going to happen next. 8:30 news, we sweep, get our market structure shift, then we consolidate. Okay, then you might zoom out, look at the bigger picture. High of the week, high of the month, likely in. Getting in a premium to target discount is a good opportunity. No matter how you get in. I just don't do market executions and no volume imbalance entries on my funded account. At least aggressive ones right after the open. Because otherwise, doing that, I can't really control my risk the way I want to, trading on my funded account. For the challenges, I'm not afraid to do that, but well, in the spotlight on the live stream and trading my funded account that I used to get payouts with, don't feel the need to do that. Don't have the feeling that I need to be in a trade every time. I'm in profit today. I'm up for the week, $1,000. Tomorrow, power is speaking. That's usually when I get less favorable price action. So I might not even stream on YouTube tomorrow, maybe only on Discord with the VIP members. I will see that. I will let everyone know on Discord and Twitter. But yeah, that's going to be a wrap for today. We just keep on chopping here. For the PM session, it's 11 a.m. now. Doesn't have to happen during the PM session. Eventually, we're going to take out the sell side. Like I said earlier, when we were down here or in this range, we're still inside of it right now. It's hard to say how that's going to be delivered into. The easiest approach would be shorting the highs and buying back at the lows. That would have worked a couple of times before so far in this seek and destroy chop. Alright. Alright guys, take care and enjoy the rest of your day. I will be back tomorrow, maybe on YouTube, if not on Discord. Bye.